Okay, we're going to do another quick video on Tupperware. This will be the second video we've done of this company. It is one of these, the gift that keeps on giving, basically. A year ago, we talked about this company as a way to consider different types of red flags that a company might throw up that makes us wary about an investment that we might own. Here, we actually see a textbook example of a very beautiful short squeeze, and I want to walk through some of the mechanics just to teach investors how these things can happen and what setups might happen that lead to conditions that produce this kind of event. So we can see that this stock, a year ago was $12-ish a share, and obviously the company is experiencing significant existential risk. And if you look at their balance sheet and their upcoming debt maturities, this company is experiencing quite serious problems. And the stock got down into 60, 70 cents range in stock price, and then within a matter of days exploded upward to $5. So we had sort of a 7 times move in this company in just a very short amount of time. So a couple things I want to go over just to talk about mechanics here. So first of all, this company has about 45 million shares outstanding. So at a 60-cent market price, 65 cent, let's say, market price, at its trough, this company had a market capitalization, which is share count times stock price, right? The market cap of this company was only about $30 million, which is quite small relative to the sort of the size of a lot of investor pools of capital out there. Now, the other thing is the short interest in this stock, and you can find short interest going to sites like seekingalpha.com. And the short interest of this stock was around 25% of the shares were shorted. And just as a general rule, if you see short interest for a company that is 20 to 30 or, God help you, 40%, something like that, and you happen to be long a stock with that size of short interest, you have to do your due diligence all over again. Clearly, there's probably significant problems with this company, and if you're not aware of them, you need to be, right? So looking at a rising or a very high short interest is like a helpful cue if you're long a stock. And in general, most stocks, normal stocks, will have short interest of very, very low amount, like a couple percentage points, something like that. And normally those short positions would be sort of maybe hedges that people had put on that have nothing to do with the sort of the integrity of the company, right? So, but when you have a combination of a relatively low market capitalization plus a high short interest, you can easily get a short squeeze. And then there's a third component, which is it has to do with the custody or what a broker will allow you to do if you are short a company like this. Often, it won't allow you to use any margin or any leverage or borrow any broker funds in order to hold that short position. And so if you have a short position that goes against you, the broker may actually buy you in as a result. So these are just sort of different kind of examples of dry tinder that are sitting out on the forest floor, right? And it just takes a spark. It takes, maybe some relatively large capital investment firm that maybe only speculates with a small amount of its capital because it identifies a potential situation that might lead to a short squeeze, and then it causes a buy-in from the people who are short the stock. And if you think about the mechanics of shorting a stock, right, what are you doing when you short a stock? You're actually selling shares that you don't own, those shares are borrowed. The broker will go out and borrow shares on your behalf. You'll sell those, but with the future intent of buying those shares back when the stock price is lower. The problem is that a short position technically then represents future buying power of a company, and if the stock price starts rising up, you might actually panic shorts into covering, which sort of creates a feedback loop, right? And that's literally what a short squeeze is, and that's been what's happening these past few sessions. So I wanted to teach this concept. This is not a statement for or bullish or bearish or for or against this company at all. I personally don't traffic in situations like this, but they are fun to watch. And just as a general rule, you want to be careful shorting always. You want to definitely be careful when you see a stock that you own with a large short interest position. And then third, when market caps get very, very low, very small, they can be whipped around by people. So these are just different kind of concepts that I wanted to make sure I conveyed. And as always, I thank you for watching.